Welcome everyone to today's market update. It's Friday, it's the last weekday-ish of the week. So if you're trading Forex, markets are probably closed, but if you're trading Bitcoin, the markets are open 24/7, which is great. Although I don't really trade weekends, so I kind of take weekends off to relax, chill with the family. But if you do trade weekends, you're probably thinking, right, what are my trades for this weekend? So that's what we're going to be talking about. We're going to be looking at what the market has in store for us and just planning the current/recent price action. But before we do that, on Sunday, don't forget, this Sunday we've got our Sunday bootcamp. Now, bootcamp is we basically have a group Zoom session on the last Sunday of every month. And it's for us to kind of understand the strategies I use on this channel, to understand how to trade sort of the way I trade, and just understand the fundamentals of trading. So what will be covered in the bootcamp? Everything trading, so market structure, order flow, supply and demand, and everything you can think of. Of course, it happens the last Sunday of every month. So we've got one on Sunday, this Sunday coming up, and the next bootcamp will be next Sunday. So if you are interested, drop me a message, hit me up. You can actually reach us on the website tradejournal.co.uk. Have a look at this tool over here. You can chat with us in the chat bot. Also, you can connect on Discord. The Discord link is in the bio, so if you want to have a chat, feel free. We've got a network of traders growing and building here every day, and we've got our signals up here as well. All right, so feel free to get in touch with us through those channels. So let's have a look at what our price action is telling us. All right. So I think as it is Friday, it's the end of the week. It's been a long week. It's been a week full of some options, full of some trades. We're going to take a global view on Bitcoin first of all. And then we're going to work our way down and we're going to look at the recent trades that, we had given out and how they performed. But before we do that, let's take a look at, Bitcoin on a global perspective. So Bitcoin on a monthly looks like this. On a monthly, it's got the high market structure that looks as follows. We've got a high low, SFP of that high, a bearish break in market structure, okay? And then after that, we should, order flow suggests, or technically we should have got a retracement, shouldn't we? A retracement for that lower high to follow that continuation. But what did we get instead? Well, we actually got a high. And that high on the monthly closed above the prior high. It did. It closed above the prior high, although not a very convincing close. All right? If we were to measure that, we could see that it probably didn't even close plus 20% of that range. All right? So that is screaming, for those of you who have followed this channel for a while, that's screaming a potential fake out, a potential manipulation for that power of three play, for that bearish expansion leg. That's what it's, you have to have that at the back of your mind, because what we would want to see is a more convincing close up, for that continuation. Now, it could still go up. Of course it could. And if it does, we're going to be prepared for that. All right, so let's go down. If we go down to the weekly, now on the weekly, what do we have? Our weekly structure. Well, there's no point looking at the structure over here because that's that's gone. That's 2021. Our weekly structure, recent weekly structure looks like this. Higher high, we have a higher low. We have a higher high, we have a higher low. We have another higher high, okay? And we have a higher low, all right? And then we come all the way up here, meaning our last weekly high low is coming in at around 38,757. So I'm going to mark that out, and I'm just going to call that our weekly structure, our last weekly structure. So we know that on the weekly, before our weekly turns bearish, we need to break that level. Well, not only do we need to break below that level, we need to close below that level. All right. So let's take a look at the daily, why don't we? So on the daily, again, we're only going to look at that last expansion leg on the daily. So on the daily, we have a little bit more structure as we're coming closer and closer towards that range we're in at the moment. Higher high, higher low, higher high, higher low. Okay. And then we have a clean sweep all the way up. What does that tell us? That tells us the last high low on the daily is coming in at around 50,477. So we're going to call that our daily. All right. This means we cannot consider a bearish flipping structure only until that daily level is lost. Only until we close below that level. Now, why don't we take a look at the 4 hours? So what I'm showing you guys here is how you should really and truly just get through your time frames, from the higher time frames to the lower time frames, to build that narrative. All right. So if we look at the 4 hour structure, what we can see here is that we have the higher high, high low. We've kind of ignored the structure over here because it won't really change the result, because this is our last high low. We have a higher high, higher low. We create another high, we create a low. And then on the 4 hour, we create an SFP of the high, we change structure bearishly, and then we flip structure bullishly again. We range, we distribute up there for a bit, we break down out of that range. After we break down out of that range, we change structure again, all right, leading us into this, high that we have at premium. We then change structure on the 4 hour in here. But what's going on here is, you're probably thinking, why is the daily and the weekly and the monthly so smooth, but a 4 hour is full of change and structures? Well, it's because we're playing within that daily swing structure, aren't we? The daily swing high is coming in at about 74 grand, and the daily swing low is coming in at about 50 grand. All right, so all of this structure is within that daily swing high and low. And what do we have here? We have a clear range, and in this range, we are allowed to break structure bullishly. We're allowed to break structure bearishly. Otherwise, how is the range supposed to oscillate? How is it supposed to turn up and down, up and down? How is it supposed to be a range? The only way it's going to be a range is if A, we are breaking structure up and down, creating that nice S shape or that M shape. And secondly, if we're creating fair value gaps or inefficiencies on the way up and the way down to be filled, creating that range motion. All right. So here we have it. So what this means is that because we have a range, we can't really be, we can't really say that we are bullish or bearish until we see what happens within this range. Now, this range has been going on for over 40 days. We're in the 43rd day now for this range. So this is a big range. This range is gearing up for a big move. Now, whether that's going to be a big move up or a big move down, we are yet to find out. Okay. So we can't really be sure until we either break up from this range or we break down for this range. Of course, if we break up from this range, what are we looking out for? A retracement for that continuation. If we break down, we're looking for a retracement for that continuation. Okay, it's very simple. Very, very simple. Now, let's take a look at what's going on inside the range. So I'm going to get rid of this. Inside the range, if we draw our range, obviously we've got our range high and our range low. We're just going to draw that over there. We're going to change that to something that we can see. Change the thickness. Let's make it red today. Let's make it nice and red. All right, red because it's about to break. It's going to break soon. I'm pretty sure it's going to break soon. It's definitely breaking in the next week, I would say. Oh, well, I don't like to make predictions, but I think it's going to break pretty soon. So what do we have here? We have our range. Now, we've been playing nice structures within this range. We've been scalping these range. We've got a long there. We could have gotten a short there. We had our entries left, right, and center. All right. But most recently, the setup we gave, all right, let's take a look at as of the 25th of April, which was yesterday. So if you were following or had a look at these videos yesterday, there's no reason why you wouldn't have entered this play. Okay. So if we zoom, if we fast forward, what were we looking at yesterday? Well, we said we broke bullishly. We were distributing a nice little Trinity Model 1 distribution, all right? And what did I say yesterday? I said that Model 1 distribution is showing us bearish signs, as we can see. So we've got the bearish signs. We've got that bearish divergence. Now, we did get a slight manipulation up before we broke down, but I said yesterday there is a high chance we rotate down from this range, but we could only be rotating down to reach these levels, potentially reaching this 12-minute demand or this 24-minute demand. Okay, so that was what we said yesterday. Let's see if this plays. I'm not sure if this is going to play, but let's see. So I'm just testing this. I'm not sure if it's actually audio is going to play in this video I'm recording, but if it does, that's why I'm silent, is because I am testing this. So what we were saying we're looking to get a rotation down. Okay, so there we have it. We're looking for long number 1 at that 12-minute zone and long number 2 at the 24-minute zone. So let's take a look and see what that looks like in terms of where we are now. This does look confusing, I admit it looks confusing. But if we zoom in, we can clearly see that, this was a distribution. We kind of came above the distribution. We had a slight manipulation, all right, a manipulation of retail traders before we marked down. Now we did mark down, but when we marked down, we pierced through. We did react off of it, but we pierced through and closed below our 12-minute demand zone. So that was a failed demand zone. If it's failed, we don't need it anymore. So that demand zone is gone. Now what next? The next zone we were looking to play was this 24-minute zone. Now this 24-minute zone is where we currently are at. Now this 24-minute zone is a key zone, and it's obviously a zone that's worked, but it's not complete yet. It hasn't fully done its job yet. Even though I am in this long trade, and after this stream, I probably should move my stop loss to entry, and I'm going to tell you why in a second. But let's see how we could have entered this trade that was given well in advance. So if we look at the market structure as we came into that zone, remember here we wait for our market structure confirmations. No change, no trade. If we look at our market structure on this expansion leg down, all the way from the top, we have a lower low, lower high, and then we have SFP of that lower low, okay, which means we get a rotation up. But we also SFP at the top, or pump fake at the top, or sweep the top, and then we come down. Okay, so we're going to make this red because this is our bearish action. Now on that bearish action, I'm going to hide this because we don't need it so far. On that bearish action, cool, what does that mean? That means on the 10-minute, we can't really justify a trade until we get a close above this level. All right, but price still hasn't tagged that level. So TJ, why are you in that trade? Well, the reason I'm in this trade is because I went down to the 5-minute, okay, and I tried to look at the 5-minute structure on this expansion leg, this decisional expansion leg, and a 5-minute structure shows nothing. All right, so what did I do after that? Well, 3-minute doesn't really show nothing. But then I also looked at the 2-minute. Now the 2-minute structure did give us something, all right? But the 2-minute structure is risky territory. Why is it risky territory? It's because the lower you go in market structure, the more risk you're going to take on. All right. Now, if you do get an entry on a low time frame, yes, the risk to reward is better. But the lower you go in market structure, the more risk you take on, because you're going to get more failed confirmations the lower you go in market structure. But so I entered this one on the 2-minute. How did I do it? So I said we've got a lower low, a lower high, a lower low, lower high, and then we had another lower low. I don't know if you'd count that as a lower low. It doesn't really meet all my conditions, all right, but we'll go with it. And then we had another lower low, okay, and then we had a lower high. And not only did we have that lower high, then after that, what happened? So obviously the last lower high that needs to get taken for me to enter that trade is this level here. But after that, what happened? Then what happened? We got a sweep of that level. So we came down, swept that prior level. Remember, that's basically a second entry. That's a counter trend model 2. Now, this is something we're going to be talking about in the bootcamp and in the one-to-one session. So if you want to get more information on that, hit me up. Now, we changed structure bullishly. All right, now there we have it. That's the change in structure we look for. After that change in structure, what happens? We're expecting a retracement back into our demand and for some further continuation up. And that's why I entered that trade. Okay, I entered that trade on the lower time frame. Now I'm very aware that on the higher time frame, we still haven't got our confirmation. So this could just be another lower high, okay, another lower high in order to put another low, or to, get past this 24-minute zone and go to this zone we have underneath us. That could be what's going on. So I'm very aware of that. And because I am aware of that, I am monitoring this trade. Yes, this trade is up in profit. Yes, I could take profit, move the stop loss to entry and, make it a free trade. Yes, I could do that, of course. But what am I looking out for? Well, I'm starting to see signs of weakness here. What do those look like? Well, first of all, you'd be silly to ignore this mini distribution we have going on here. All right. This mini distribution is telling us, now price is struggling to get up. Price is struggling to get up. If we're looking for a quick bounce off of the zone, we should get a quick aggressive reaction. And we should look to take out these highs immediately. We shouldn't really be getting a distribution here. All right. This is showing that the price is ranging. It's starting to slow down. So what am I doing as a result? I'm going to make that smaller. As a result, it looks like if we go on the 3 minute, perhaps, it looks like we have to monitor the price. And if we see a flip, we need to get out of that trade. So we've got high, low, we've got high, 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 low, high, 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 low. Okay. And then after that, we've got a high, high. Now that high, high, weirdly enough, is coming at around here. Okay, let's make this nice and tidy. There's no point being messy here. So high, 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 low. Let's say that's the next high, that's the next low, that's the next high, that's the next low, high, high. We're going to make that green, of course, because we're in the bull direction. Okay. Now that means this low needs to go before we get that transition in market structure. If this goes, we get out of that trade. But if we follow the market structure, it looks like this low was taken out, which means we have had more structure develop. So this means this is our next high low, and this was our next high high. Okay, so we got an SFP off that level, we got a wick off that level, which meant we rotated down. Okay, so what does that mean? That means this level here was the level to go. I'm going to make this as horizontal as I can. Okay, this was the decisional level to go. All right, so we're going to take a look and see whether we've broken below that level. And it looks like we have. It looks like we have broken down below that level. Okay, so let's look at that, whether that's confirmed on the 5 minute. Yes, that's confirmed on the 5 minute. Yes, it's confirmed on the 10 minute, even though we haven't had much of a structure on the 10 minute. Okay, so what's that telling me? That's kind of telling me that it may be worth getting out of that trade, or at least securing profits. Okay, so what I'm going to do there is actually I'm going to move my stop loss to entry. All right, and I'm not going to take any profits out of that one. I'm just going to move my stop loss to entry and make sure it's not a losing trade. Okay, because I am seeing bearish signals here. Okay, and as a result, I'd be silly to ignore it. So after this stream, I'm going to move my stop loss to entry and let that run. Okay, because it's looking like it wants to rotate and come down and at least take down these lows. All right. So that's how I enter that trade. Okay. So now, TJ, what's up? What's the next trade look like? Well, the next trade looks as follows. There is a high chance, if we are going to come down here and pass through that equilibrium, there's a high chance that we have another range here. Okay. This being the range. But that range is not yet confirmed. For that range to be confirmed, I would like to see price come a little bit lower first. Okay, before that range is confirmed. Now, if we do have a range, that means, all right, all our range models come into play. Range model 1 and range model 2. Range model 1 would be a sweep of that low. So I'd be looking for that range low to be taken. So looking for a long off that low. If we get an SFP off that low, that would be beautiful. Take that to the range high. That would be nice. Okay. And range model number 2, perhaps we get a reaction before we get there. So we'd want to look here to see whether we have any zones. So we want to look in here to see whether we have any zones. And I'm going to do that now quickly to see whether we have any zones in there. I'm going to get rid of all of this because kind of just makes it a bit untidy. So let's see if we have any zones in there. So nothing I can see on the 5 minute. Let's have a look at the 3 minute. Nothing I can see on the 3 minute. Let's have a look at the 2 minute. Nothing I can see on the 2 minute. Do we have a 1 minute zone? Is that a 1 minute zone? Let's see. No, that's already been mitigated. Okay, so that's it. There are no zones in there. Okay, all right. That doesn't mean we can't get perhaps a Fibonacci reaction. Well, if this is the low and this is the high, if we were to use our Fibonacci tool, let's look at Fibonacci 2, make that 3. There's no reason why we can't get a reaction perhaps off of the 786 or the golden ratio, but I'm going to leave that. I don't really trade Fibonacci that much, so I'm just going to look at this zone for my next long. All right, that's if we continue to rotate down. So that's the only new trade I'm watching out for. Okay, that's the new trade I am watching out for. I'm still looking to see whether this trade goes up here, and I'm going to see whether we get a reaction off of here as well. So perhaps this is a zone to watch out for here as well. Okay, for a potential short off that high to rotate all the way down. Okay, don't forget, guys, we still have the zones from earlier in the week, so we're going to move those to the right, just so that we are aware this is a continuation play, and this is a continuation from a distribution that took place earlier in the week, which means we are still aware that these are our short zones. Okay, so these are still areas for our reaction point. So that's what the trades look like going into the weekend. I hope you guys have found this useful. Looking forward to boot camp this Sunday. So yeah, I'm wishing you guys all the best. Make sure you're trading well, you're practicing good risk management, and I will see you on Monday.